Hello everyone, how's it going? In this video, we're going to talk about what is happening with Castor Maritime, the CTRM stock. So there's some amazing news to report. They came out with their Q1 2021 reports with a 1.1 million net profit. So that's an amazing news to cover. And apart from that, we'll also be looking into what happened with their Q4 2020, a little bit about the reverse stock split. And I also want to go over some of the insights, some of the things that I've noticed on how they've been running the business. So that's something interesting to look into. Let's get started. So firstly, the Q1 2021, which is the highlight of today, they came out with this earnings report for Q1 2021, and they reported about 1.1 million net profit for the first quarter. So that's amazing. The revenues were up, and they were about 7 million for the first 3 months, which is Q1 of 2021, compared to 2.7 million, which was last year for that same quarter. So you're looking at more than double, which is about 160% of increase. So that's amazing news. I wish the stock would have been also same, but okay, we'll get there. The second thing is the net income. The net income is about 1.1 million for the first 3 months of Q1 2021, which compared to the 0.3 million of loss they had last year for that same quarter of 2020. And this was pre-COVID. So that's amazing again. Now the earnings and loss per common share. This time they had an earnings of 0.02 earnings per share for the Q1 compared to the 0.68 loss per share for the same quarter of 2020. So that's again amazing. But something interesting to look into is if you look into the December quarter or the Q4 2020, they reported that they had about the loss or earnings per share. They had reported about 0.01 loss per share for the 3 months of December 2020. So the Q4 2020, and that was compared with the earnings per share of 0.20 for the 3 months of December 2019. So if you compare with 2019 and 2021's quarter earnings, not so much of a difference, but again, they're getting it. At least they've come out of that red zone. Now, there's the other exciting news is about the acquisition of vessels. They have a staggering number of 20 vessels on board with them right now. They're saying since the beginning of this year, Castor announced the acquisition of 20 vessels. That's amazing. On a fully delivered basis, Castor will own a diversified fleet of 26 vehicles, having more than quadrupled its fleet size since December. So by the end of this year, they're planning to have about 26 vessels. That's simply amazing. Now let's go back into what was happening with regards to their reverse stock split. So last month, on the last week of May, we saw the reverse stock split, and we saw how the stock, they wanted to compliance with the NASDAQ, and this was something which he had already covered in their previous quarter. And the reason I'm bringing this is because the next point that I'm going to show you is important for this. So let's look into this. On December 2020, this is the Q4 of 2020. And this is the commentary from the owner. And he's talking about on December 30, 2020, we announced that we received a notification from the NASDAQ stock market granting us an additional 180-day extension until June 28th, 2021. Now this was an extension, and there was possibility of another extension, but they were already working on how to solve that. So they're talking about we can cure this deficiency if the closing bid price for a common share is $1 per share or higher for the requisite amount of time during the second compliance period. Now they're also talking about how NASDAQ may exercise its discretion to extend such requisite amount of time to better evaluate the registrant's ability to sustain long-term compliance. So there was some extension, there was some talks about it. But in this report, he already spoke about how they're looking into different options, where we are evaluating our options to regain compliance with the minimum bid price requirement with the second compliance period, including a reverse stock split. So this was something which was already discussed. During this time, our common shares will continue to bid or list on the traded price of NASDAQ capital market. So they already had that reverse stock split in their mind. Now look into this thing, which is very interesting. This is their press release section on their website, and notice a few things. One thing, when you're having any kind of direct offering or you're having dilution of shares, the stock price goes down, and everyone knows that no one better than the owners themselves, and they are the ones who are most concerned about holding that NASDAQ compliance. So even though with that they have been continuing the direct offerings. So look into this. Castor Maritime announces price offering of 18 million, announces another direct offering of 26 million, then does some announcements of vessel acquisition, then another vessel acquisition, then another vessel acquisition, or they've been acquiring acquisitions of vessels all again. They've been taking deliveries, they've been acquiring, they're buying new vessels amazingly. And they've been continuing to do that. My point here is they've been doing the direct offerings, they've been giving out money. Right here in April, they did 125 million of direct offerings. And they knew that the stock price would go down. But they were looking for the long-term picture. They were looking for where the stock market is available for them to raise some cash, and they use that cash in a very good way. Now, you might think that it's spending money, but this is nothing but investment, where you're buying new vessels. That's nothing but going to help them increase their profit margin, increase their capacities, and that's ultimately going to bring them revenue instead of any expenditure. So this is not a liability, but an asset for them. So that's an amazing thing there to work into. So that's a little bit of an insight which I wanted to share with. I noticed with regards to this company, how even though they had that NASDAQ compliance problem lurking over them, they still went out and did those direct offerings, raised those cash, and then took that cash in order and invested it into buying new vessels. That's the amazing thing that I've noticed, and that's something just to share with you. With that, take care, stay safe, bye-bye.